Hey everybody, I'm Zach.
And I'm Jesse.
You're watching Disruptive Investing News, and so I thought we would talk about Rivian. I bump into a lot of people who invested in Rivian, and I'm always kind of surprised by that because when I talk to these people and I assume that they bought Rivian in conjunction with Tesla, I often find that they did not also invest in Tesla. And so I ask them, why did you invest in Rivian but not in Tesla? And the answer I often get has to do with the look of the vehicles. The R1T electric pickup truck and the R1S SUV. They'll often cite the looks as the leading reason why they invested in the company. Now, I get it. Vehicle design plays a huge role in whether or not people buy a car. But it's surprising to me how little people seem to know about the company that they just invested their hard-earned money in. So when I ask them about charging networks, when I ask them about autonomy, when I ask them about safety, efficiency, I generally get a lot of blank stares. And this, I think, is a big problem with many investors. So do you remember Peter Lynch, the famous value investor who worked at Fidelity in the 1980s? He talked about how you should invest in companies that you know. Like if you constantly buy a brand in the supermarket, you should look into who owns that brand and possibly invest in them.
Okay, and that makes sense on a certain level, and Peter Lynch did quite well, averaging 29.2% annual returns between 1977 and 1990, more than double the S&P 500.
But he also stressed that you should be able to understand what you own. And I guess what I'm saying is if you can't explain to me beyond the look of the vehicle why you bought stock in Rivian, then I would argue you don't understand what you own.
So let's get into Rivian's Q2 earnings report so we can understand a bit better what it is you might own. And by the way, disclaimer, Zach and I own stock in Rivian, but we are not financial advisors. Do your own research. Investing involves risk.
So as always, when you're reading earnings reports, try to steer clear of the headlines or the first few sentences in an article that say stuff like, Rivian crushed expectations.
Analysts had expected around 11,000 deliveries, and so when Rivian delivered 12,640, I guess you could say they crushed it. But honestly, to me, this comes about after having already lowered the bar so many times that I am not enthused.
Right. I mean, to me, the production and delivery chart looks pretty linear, not the kind of exponential growth that you saw from Tesla. I'm a little more enthused that Rivian said they were able to reduce input costs by about 25% this quarter with the use of the new in-house components like the new Enduro drive units and the LFP battery packs.
You may remember that Rivian started selling their cheaper dual motor and performance dual motor and the R1S online last month.
Rivian generated $1.12 billion in revenue, up almost double from Q1, which was $661 million.
So that's good news. But what isn't good news is that Rivian has had a net loss of $1.2 billion in Q2.
Now, to be fair, that is down from a net loss of $1.7 billion year over year, and Rivian had some regulatory credit income.
So following in Tesla's footsteps by selling credits to car companies that make too many gas guzzlers.
Yes, Rivian made $34 million from regulatory credits.
And it's funny how none of the analysts make a big deal about this, whereas when Tesla makes money from regulatory credits, everyone acts like they're not a profitable company all on their own.
I know, right? So getting back to margins, Rivian said that they improved their gross profit per vehicle delivered by $35,000.
Wow.
That sounds great, but
Yeah.
Let's put that in perspective. Now, you can say that gross margins improved by 50% in Q2. Again, makes for a great headline, but they were losing $124,162 per sale in Q4 of 2022. Then Rivian improved that in Q1 of this year to a loss of only $67,329 per vehicle. And then they improved it again in Q2 to a loss of only $32,595 of gross profit per unit delivered.
But that means that Rivian is still going to have to come up with over $33,000 worth of savings per vehicle in order to be profitable at all.
Yeah, and if they want to get to, let's say, 10% margins to actually make a profit on the vehicle, they're going to have to come up with a cost savings of close to $50,000 per vehicle.
And this is gross margins that we're talking about.
Right.
That's just the stuff.
Right.
That's not everybody at the company.
Nope.
Okay. So this is no easy feat. I mean, Rivian says that about 70% of their total production was the R1S in Q2, which is the first time that the R1S has overtaken the R1T.
Right. Rivian's latest guidance for adjusted EBITDA is $4.2 billion. And so we turn our attention to how much cash Rivian has on hand, which appears to be $10.2 billion, down from $11.8 billion in the previous quarter.
So again, Rivian is running out of runway pretty fast.
Now, Wedbush analyst Dan Ives, who is a longtime Tesla bull, wrote to his clients on August 8th that Rivian took, quote, another big step in the right direction with its Q2 results. He said, quote, demand looks strong for Rivian and visibility is improving into 2024. And he says he sees Rivian as, quote, one of the core EV players over the next decade. So this is causing quite a few investors to think, ooh, this might be a good time to buy Rivian cheap. It's now valued at 1/5 the value from when it went public. And so is this the right time to get in on this company that has gone through this kind of growing pain of scaling production?
I mean, there is some good news here. Rivian said that it has lowered its capital expenditure forecast to $1.7 billion for this year, which is down from $2 billion.
But I mean, they kind of had to do that. They're running out of cash quickly and they are continuing to cut costs. But to me, the big question is, will they be able to keep demand going so that they can ramp up production and continue to lower these costs to get to the profitability? Or is demand going to dry up before they can get there?
But Zach, how would demand dry up? These vehicles are so great. There couldn't possibly be any other kind of competitor that makes a vehicle that would put to shame the Rivian. Would there?
Right.
Like maybe the Cybertruck?
Good point. Will the Model Y and other new SUVs entering the market from other manufacturers affect their R1S sales?
Will Rivian put out their cheaper model, the R2, which they're saying is coming out in 2026, in time to catch the bigger car market? And will that model be profitable?
Will Rivian be able to open their $5 billion Georgia factory on budget and on time to build this R2 lineup?
CEO RJ Scaringe says that Rivian doesn't need to do a capital raise before 2025. Will that be true?
So there's no question that joining NACS, the North American Charging Standard, or the Tesla plug, hugely benefits Rivian.
We can tell you even now, we don't want to go on long road trips in our Rivian R1T because there is no place to charge.
When we finally have a way to charge the R1T at Tesla superchargers, it's going to open up so many more possibilities for adventuring in this truck.
But again, will it be too little too late? It's going to be a couple of years before we see Rivians with the NACS plug, and Rivian barely has the runway to get there.
And it comes down to, again, is just being electric enough of a disruptive technology when their major competitor Tesla is being disruptive in so many additional ways? Not only is Tesla electric, obviously, but Tesla continues to innovate with their batteries, with their heat pumps, with their charging, with their safety, with their autonomy.
This is the kind of stuff that we talk about on our Now You Know Investor Club all the time.
Yeah, in fact, this weekend, we're going to be live streaming one-on-one with the CEO and founder of an EV company up in Canada, and we'll be discussing the challenges of scaling production.
And our Now You Know Investor Club members are invited, as always, to join us on that call to ask questions directly.
Yeah, so if you want to help support the work we do and to get to join our Investor Club, head on over to our Patreon. The link is down below.
For as little as $1 a month, you can see all of our Patreon bonus stories that we do every single week.
These are the stories that we can't fit into Tesla Time News, our flagship show over on the Now You Know channel that we do every Tuesday.
Because to stay on top of disruption takes work.
Technologies are constantly changing. Who knew that AI would become a thing that we'd all be talking about and using this year in 2023?
So let us know down below what you think about Rivian, why you're investing or why you aren't.
And don't forget to hit the subscribe button and the bell notification button so that you won't miss any of our upcoming episodes here on Disruptive Investing.
Thank you so much for watching, everybody, on Disruptive Investing.